Hello, my name is Richard Crevo with Daily FX Education, and I wanted to talk with you a bit today about how I use the MACD indicator in my trading. And what I want to tell you at the outset is, anytime I'm executing a trade, anytime I'm going to be using an indicator, the indicator is not going to be the first thing that I'm checking out. The first thing that I take a look at is the daily chart. I want to look at the daily chart so I can make the determination of which currency pair is demonstrating at this time the strongest trend in either direction. Because I know that by trading in the direction of that trend, I'm increasing the likelihood of success on my particular trade. So once I make the determination of the currency pair I want to trade and the direction that I want to trade that pair, now is when I bring the indicator into play. So with the MACD indicator, I have 4 checkpoints that I use. The first one is there divergence present in the direction that I want to trade the pair? So let's say, for example, my daily chart tells me that I want to short this particular currency pair. Now, if I have negative divergence between the MACD indicator and price action, in other words, price action is going up, but the MACD indicator is going down, indicating that momentum on this particular currency is fading, that's a good thing for a short position. So I want to have divergence in the direction that I want to trade the pair. The next checkpoint is going to be the MACD line and the signal line. Are they above the zero line or below the zero line? When the MACD line and the signal line are below the zero line, that indicates more of a bearish bias on the currency pair. And when the MACD line and the signal line are above the zero line, that indicates more of a bullish bias. So again, depending on the direction I want to trade the pair, I can compare where those lines are relative to the zero line. The third indicator that I use, the third checkpoint on this MACD indicator, is going to be the histogram bars. Are they sloping in the direction that I want to trade the pair? So in this case, the histogram bars are sloping to the upside. This would be a good indication using this particular indicator for a buying opportunity. The opposite would be true for a selling opportunity. The fourth checkpoint that I use is are the histogram bars crossing the zero line in the direction of the trend? Again, if they're crossing the zero line in the direction that I want to trade the pair, so much the better. And we can see that these histogram bars are crossing the zero line to the upside. That would be good for a buying opportunity. Then what I do, after I've gone through those 4 checkpoints, is I go back to the price chart. And what I'm looking for there is, let's say if I want to go long this particular currency pair, and the pair has traded down and it's hit a support line. What I'm looking for at that support line are candles, candlestick patterns that are indicating to me that the pair is going to hit that support line, bounce to the upside. So if the pair traded down and now there's a couple doji candlesticks along that support line, that's great. If it traded down to that support line and I see a morning star candle pattern, which is a bullish reversal pattern, down at that support line, that's great. So I've got my 4 checkpoints, I've got my candlestick patterns all lined up, I'm good to go. What I'm waiting for now is the trigger from MACD so I can enter the trade. The trigger to go long is going to be when the MACD line crosses over the signal line to the upside, as it's done right here, and the angle increases and the separation between the MACD and the signal line increase, indicating growing momentum to the upside, which is what I'm looking for that particular trade. In a downside situation, if I want to sell the pair, I'd be looking for the opposite. That's how I use MACD in my trading. I hope you found that helpful. Again, this is Richard Crevo with Daily FX Education, and good luck in your trading this week.